Hey everybody, welcome to Trading Capital's Daily Analysis video. Today we're discussing natural gas and uranium. So starting off with natural gas, I just want to say congrats to our members here at Trading Capital. We were able to bank quite a bit of profits on the natural gas trade. If you've been following our free videos on this channel, you've likely also been able to participate in the upside move that we caught. Our members were able to take profits on our oil trade. We banked over 21.26% today. We also took on our daily live stream, I called out 172 short, and we had a massive gap down all the way to 128. We covered for a nice 25.58% on the day trade. And again, that was free alpha called out on our live trading stream, basically on this February 20th candle. So nice job if you're able to take those trades with us. We also discussed that if this natural gas were to hold its move, look for sympathy trades in resource stocks. AR, look at that massive move in Antero Resources. We closed another trade in AR for another just over 13% with members, and even if you bought at the low, you had a monster rally all the way up to 26.49. We warned you in yesterday's natural gas update that this would be a likely beneficiary, and even if you chase the price action off of the gap up, you still had a 5-6% profit on a day trade you could have made. EQT, another one we mentioned, massive gap up and closing near the highs of the session, up 10.5% today. And then you look at LNG, that was a little bit slightly less, but still strong candle, especially when you factor in the market was weak today. Now, just a little bit of an update. I do think natural gas, despite taking all these profits in various trades, I'm still holding a core long position with members. UNG is the core long-term ETF that I'm trading for, accumulating a long position. And I just use the levered plays as more swing trading, quick day trading vehicles. This one has much less decay than some of the levered ETFs, so I don't like holding those over the long term. But right now, I'm still holding a 4% allocation in natural gas. If it goes lower and wants to retest this gap, I do think that I would like to accumulate more. But let's just look at the actual natural gas chart. One thing I'm watching for, imagine if we close the month with a monthly bottoming tail that closes back inside of this monthly bottoming tail. I think that's what this type of reversal might be signaling. The next big zone to get above is this monthly gap fill. Call it 186. If we can start getting a close inside and above 186 on a daily chart basis, you can see that's the resistance we've kissed and hit. It's right at that big monthly gap fill zone. So this is a huge level for the bulls to try to get above due to the fact that we're still oversold. I'd anticipate that we should get through there. If you get a daily close above that, then you look to test 225 on the chart. But again, if you're interested in how I'm trading it, definitely visit tradingcapital.ca for our swing trading and day trading service. Again, it was pretty terrific to see that a lot of subscribers that aren't even members were able to participate in the natural gas trade with us. Let's quickly take a look at uranium, another new ticker that we have been eyeing up, and we've had some interest and requests around uranium. So we're looking at URA, the Global X Uranium ETF. First things first, uranium is in a massive bull market breakout, almost trading near the highs of the session. It briefly did make 52-week all-time highs in the month of February here and got rejected kind of off of a double top scenario. We've had a nice pullback from 32.60 all the way down to about 27.60. We're holding support at the EMA 113. This is this orange moving daily average. This is actually a decent area to start accumulating on the long side. You're also retesting the previous all-time high pivot. So this does bode for a potential technical bounce since you are getting that initial pullback from the all-time high price. If for some reason uranium loses this critical zone of 27.80, 27.90, you'll likely retest this 25.55 zone. You can clearly see it would come in line with this 50% retrace of this low to high move. It would also be retesting the neckline of this breakout trend line, and you'll also have this beautiful upsloping parallel channel. If I highlight this channel again, you actually have a secondary parallel channel, this pivot high, this pivot low. these two pivot highs, and that could be another pivot low. So there's a big confluence zone here at around 25.50. I think it's safe to accumulate and start an entry off of this zone, expecting a decent bounce, maybe retesting and making a new high. But again, just leave yourself, I think, maneuverability to add to the position if we go lower. CCJ, very similar. CCJ is interesting because it hasn't quite officially tagged that 382 Fibonacci zone, and it is actually showing a little bit of relative weakness. So I don't like that when the more speculative stocks are actually showing weakness as opposed to strength. You have uranium, URA, holding above the EMA 113, so the actual commodity-based ETF is holding above the key technical moving average, and then you have the more speculative equity trading below the EMA 113. So a little bit of relative weakness in the actual speculative resource stocks here, but definitely interesting to see that the underlying commodity is showing more relative strength. I like to see the more speculative investments leading the underlying commodity because that's still showing a lot of bullish upside bias. So you can get a bounce. I'm actually expecting CCJ to probably bounce here soon and retest this 45 zone. If you can get back above this trend line, then you'll likely push for new highs in the trend. Hopefully you found this video helpful. Please like the video down below, share it, and definitely check out my website to see how I'm trading natural gas, oil, and a variety of other commodities. I think commodities are certainly at an interesting spot across the board, whether it's gold, silver, uranium, oil, natural gas. There's a whole host of things that are eyeing up for potential trades. On that note, tomorrow will be a massive technical gap up on the QQQ, Nasdaq, NDX chart, SPX chart. Reason being, Nvidia reported earnings, and obviously it had a monster move back to the high side. Look at that hourly candle. So if you look at the 4-hour chart, all you've done is simply retrace pivot to pivot to pivot, and you're underneath that. I'm watching that area like a hawk tomorrow. If for some reason we cannot hold above your previous all-time high price, I think Nvidia is a short. If you start getting a 5-10 minute close above the all-time high price, you want to get out of this freight train's way and let it run. Nvidia has a tendency to run because it's still in a speculative hype mania, a lot of momentum around AI and the future of AI. So this right now is still a mega cap powerhouse stock that has momentum, that has liquidity, and it certainly is going to be interesting to see how it closes. A lot of data will hit the tape tomorrow in different increments and time intervals. You have 8 a.m. data, 11 a.m. data, 1 p.m. data, so be ready for intraday volatility. I think the windows before the data are a little bit more safer to trade than after the data, because if you're stuck in a trade, that data could really start to spike or lower yields. If you're shorting and yields fall, this market may rip even more. But if you're chasing longs off of a gap up, then and the yields come out on the labor side, they move the yields up, that could sell off the market. So there's a lot of moving parts tomorrow that you want to be watching for, but ultimately it looks like semiconductors and tech will be strong right out of the gates. It's difficult to chase gap ups. If you've missed the trade, our members were positioned with 700 calls as a nice hedge position, also 800 SMCI calls on the live stream, so those will be nicely in the money. On that note, thank you all for watching this video. Hopefully it's helped, and stay tuned for more analysis.